get your gold, to diversify your portfolio, and then it's not going to matter when your stocks and bonds and your ETFs and mutual funds and annuities and all that stuff goes to zero, right? That's when your gold will come in and you'll go, thank goodness I have that. If you don't hold it, you don't own it. In ETF, all you have is a share in a trust. You have absolutely zero access to any of the metals underneath, and you don't even know how much they actually have, because when they changed that prospectus, it's because they knew that they couldn't go out and buy enough metals to cover those baskets, which you wouldn't have access to anyway. And they are simply designed to mimic the spot market. And I've shown these graphs many times in the past, and you'll look, if they do on a day-to-day basis, they do. So if you're looking to trade, all right, that's a less expensive way to go about it. But I don't trade my gold or my silver, and ETFs are not gold and silver. They are shares of a trust, and they sell off part of their holdings every single day to pay for the fees. So it really is just a fee machine that is moving on a manipulated market. Rising gold price is an indication of a failing currency. Now, gold and silver mines are still stocks. And that means they, like those corporations, likely have debt against them. Maybe they've sold gold forward, silver forward, etc. So that's not really the physical metal. The thing about so I'm not saying that you should, I don't own any of that. You know, I mean, that's not always been true, and it's probably not always going to be true. But because of where we are in this cycle, and I was there on Black Monday in 1987, and I don't care how safe you thought something was, a stock was. When the stock market implodes, everything implodes with it, including the spot market. Because then, since so much of this has been bought on debt, what that actually means is you get margin calls and you have to come up with more money. So you would not also do well buying gold, silver mines, or ETFs. You know, if you believe Wall Street is being honest with you, rock and roll hoochie coo. I lived in that area, I worked in that area, and I study that area constantly. It's a big fat lie. Well, SWIFT is the global dollar-based payment system. And Russia and China several years ago actually created their own payment system so that they would reduce the dependence on the dollar system, because what everybody in the world is now seeing very clearly, if it wasn't clear enough before, because this isn't the first time that the U.S. has sanctioned a country, but what they do is they cut them out of that global payment system. It's kind of like I was just talking about. If all you have is dollars and the dollar loses all value, or your bank says, I'm not going to send that wire, well, what do? Because the reality is, if you don't hold it, you don't own it. So in a number of different banks have actually been blocked from SWIFT, and the Russian central bank has also been sanctioned. So the whole world is seeing that if the U.S. doesn't want you to use the payment system, all they have to do is say no. I mean, I just think this whole thing that's going on with Russia is a great example, because it doesn't really matter whether you're a government, an individual, or a corporation. The bottom line is that everything works the same way, and you need to be as fiscally independent as you possibly can be. And Russia has been doing a lot. They've been building their gold reserves. They've been getting rid of their dollar reserves, building their other currency reserves as well, solidifying that relationship with China. So are they going to deal with a hardship? Yes, of course they are. And the whole world is actually going to deal with that, because we are incestuously interconnected. But, you know, what will that do to precious metals? if you're talking about the fiat money price, really, in a true flight to safety, you go to gold, because gold is the only financial asset that runs absolutely no counterparty risk. And this is the time to be very, very, very safe. Dollars are not universal money. Rubles are not universal money. Only gold and silver, but that's secondary. Gold is universal money. So by having a large savings account in gold, what Russia has done, regardless of the SWIFT system, is they have ensured that they will have the ability to pay any of their vendors throughout the world, and everybody in the world knows that they have the ability to get paid in gold. Gold and silver are universal money. That is why they are critical for you to have, and why they need to be a foundation of every single person's portfolio as a base. Well, look, I'm an ex-stockbroker. I'm an ex-banker. I'm going to tell you, Ruby, you need to do what you're comfortable with first, but it's a Ponzi scheme. And we've already been witnessing the insiders getting out. I just did a video on that not that long ago. So this is always the same thing that happens if you leave your wealth inside the markets. And I am not saying that they won't continue to go up. I mean, Powell came out today and basically said, well, yes, we raise the rates, then we're only going to do it 0.25%. And so the markets surged. I don't know where they are right now, but they surged. Because as long as they really aren't, as interest rates are not above the true rate of inflation, then it's really a bargain. However, at the same time, what inflation actually does is it erodes the value of the currency, and there's no value left in it. Officially, you're looking at 3 cents out of the original dollar. So 1 trillion times 0 is still 0, regardless of what you have. I don't have anything in the markets today. And I haven't for a while, though, honestly, because I would always rather be 2 weeks, 10 years, I don't care. I would always rather be early than 1 second too late. So the best thing to do, in my opinion, and what I've done for myself, is I have a great retirement plan. At the moment, it's all in gold, period. And those different levels. As we go through this sweet reset scenario, and you've got income producing real estate, let's say that's at nosebleed levels, that's going to come down. And the gold is going to go up. Then I will take some of that gold and convert it into those income producing assets that I cannot outlive.